Sumit, thank you so much for joining us here at SuperReturn Asia, celebrating the 20th anniversary of the event and a time when the area of your specialism, private credit, is doing very well globally, but particularly here in Asia too.
Yeah, well, thank you for having me. Nice to be here.
So tell me about that. What are you seeing in terms of success story of private credit in this part of the world?
Yeah, well, I think it seems like it's a little bit sudden, but what we see is it's a long cycle that has been developing over time. I think if you look at the role of banks in providing credit across the world, it has been declining. Let's example of US today, they only provide about a third of the loans. In Europe, it's somewhere 50-55%. In Asia, you still had a huge amount of the credit systems owned by local banks, and the natural progression of that is for that percentage to reduce. And as banks have reduced in terms of the amount of lending they represent, private credit has come in and fill in the gaps a little bit. And I think that's been very, very strong tailwind for years now, but it's gained critical momentum now. And I think it's being helped by the fact that globally, when people are thinking about their allocations, looking at the size of the asset class, it seems like an institutional asset class now that one can invest in, and that's driving some of the money flowing into the region as well.
So those are some of the factors that are playing into that credit boom, if you like, and you talk there about global LPs. So, how do they tap into the Asia opportunity? What do they need to know and to be aware of, and what are the challenges they might face when they start to look at this region?
Well, I think there's no getting around the fact that Asia is a complex geography, right? You have a mix of what traditionally people call developed markets and emerging markets. You have, on one hand, countries like Australia, Singapore, where the legal jurisdiction and creditor laws are well established, and then you have upcoming jurisdictions where things are getting better. So, of course, with that comes opportunity and complexity. So I think that's the one thing. But then I would argue that it's not very different than how Europe has been, where people make similar distinctions lending into Northern Europe versus Southern Europe. So I think that's one challenge to get through. But then the opportunity really is that over time, as you invest in Asia, you have different countries with different credit cycles, different growth cycles, and hence different opportunities. And it is possible to build a good risk-adjusted portfolio over time if you're patient, you have the same investment process across these different geographies, and that's what you continue to follow to build. So that is the key comfort that some LPs have who have allocated. I think the experience has been pretty positive so far, but it does require committing time and understanding the region.
And in your view, this isn't just a sort of diversification piece, there is a real alpha opportunity in the region too.
That is right. I think the alpha opportunity comes from the fact that there is still opportunity to do proprietary sourcing. I think there are a number of companies here which have reached that scale where, let's say, entrepreneurs are ready to sort of take it to the next level. They would not like to dilute their ownership of the companies and hence are willing to take private credit solutions. And that is what enables a lot of these credit opportunities to come around and a lot of these transactions to happen. At the same time, private equity has been a good tailwind for private credit. And generally, if you look at the amount of dry powder that exists in private equity, amount of capital that's been raised, if you assume that gets deployed, a lot or not all of it can be supported by the banks, and private credit has a role to play there as well. So we see the opportunity on both sides, whether it's corporate or private equity. And if you look at the ratio of private equity assets to private debt assets, in US and Europe, private debt has grown faster than private equity, but that's not been the case in Asia. I think that's good news looking forward, because that means there's much more room for private debt to grow faster and really fill in that gap that exists at the moment.
So it's two pieces to it really. It's investors not just looking for different kind of structures, but it's looking at different geographies and potentially gaze shifting away from the US. Is that something you would say you're seeing?
I think so. I think US has been the only game or the main game in town so far, but of course, with shifting of geopolitics and some of the other reasons, people are looking to diversify. You're also diversifying into a region where growth is higher, right? So this represents a part of your portfolio which is growth oriented. The companies are lowly levered. Their ability to grow into the capital structure is higher. And then if you can access that opportunity via managers that have experience doing that, established teams and a track record, I think that's got some real potential in your portfolio in terms of adding value, diversification, and incremental return.
So with all you've talked about there, just finally, what would you expect to be seeing in the next sort of 12 to 24 months? What are you most excited about?
Yeah, we continue to see a lot of, we break down the opportunity between what is the secular sectors and episodic or opportunistic things that keep happening. I think from a secular perspective, we see a number of sectors, whether it's infrastructure, things like renewables, things like data centers, digital infrastructure. All of that has been growing quite at a steady pace, and all of that requires to be funded. And that is a big opportunity for private credit. And from an opportunistic perspective, I would say, the banking systems in different countries are going through different cycles, and in some, and that's also offering pockets of opportunity. So if you look at the region as a whole, and once again, one can't narrowly focus on one country because any given year, one country may provide a lot of opportunity, may not provide a lot of opportunity. But if you look at region as a whole, between the secular trends and the opportunistic credit opportunities, we see a market evolving, continuing to grow quite a bit, and it's exciting. I think a lot of new players have come into the market, and that's making it much more and more institutional with time.
Watch this space. Thank you so much for sharing your thoughts. It's great to talk to you.
Thank you for having me.